Hey everyone, Bhuva here. I'm the Chief Ethics and Culture Officer at Women in AI and a Senior Director for Finance and Compliance at Capgemini, based in New York. Thanks again for joining in today for an exploration of responsible use of generative AI technology. Especially, I'd like to share my views around business use cases in banking and payments, and more importantly, the socioeconomic implications with respect to financial inclusion and integrated with ethics as well. As we know, artificial intelligence is now an integral part of our daily lives, regardless of whether you are a technologist or a consumer, from voice assistants like Siri and Alexa to customer service chatbots that pop up on our websites most of these days. And within AI, the machine learning models are constantly learning from large volume data patterns without human direction, and thus advancing the machines to replicate human intelligence and efficiently tackle complex tasks at ease. With so much hype around ChatGPT recently, a free chatbot with generative pre-trained transformer from OpenAI, there are positive applications in many industries, like medical imaging analysis and high resolution weather forecasts and so on. But on the contrary, there are several ethical and regulatory concerns. We hear about it every day, ranging from originality of authors' writings, intellectual property rights through student homeworks, and the most controversial artwork similar to how humans create, right? So going far beyond predictive modeling, generative AI these days not only just perceives and classifies data, but we see everyday examples of how machine learning is able to generate on-demand text or image content based on its own pattern intelligence. And within the global financial services industry, recent surveys indicate that the top CEOs, CFOs, and CTOs have elevated AI to be the best return on investment. And it's consistent, be it inflation with or without the current macroeconomic uncertainty. And in fact, from the traditional investment banks to large fintechs, and also every day we have new startups upcoming, especially at the frontier of insurance transformation. The C-suite goals remain the same. How can we more accurately predict and eliminate risk, not just manage? And accuracy to the 100% is critical in finance. How can we run lean organizations while scaling across markets and minimizing operating costs? And last but not the least, how can we provide seamless, real-time, and personalized experiences that fascinate our clients and customers? The top AI use cases turned out to be natural language processing and large language models, which are deep learning algorithms critical for generative AI to recognize, summarize, translate, predict, and generate content on demand, and also based on knowledge that they have gained from massive data sets. And these are estimated to capture at least 26% of financial transformation applications in the future. And the second next is portfolio optimization and investments growth at 23%. And definitely fraud detection is looming around 22%. And this is even on high performance trading floors, right? If we want to go into an example use case in banking, where we can benefit from generative AI, it's the explosion of synthetic data. These are created by AI themselves to enhance privacy protection on the customer data that the banks have been accumulating over the last several years, right? So no longer it's feasible to just anonymize data because it's sequential, like a time series, it's mapped to the customer behavior and transactions. So we need AI-powered synthetic generators that are valuable since they can augment, diversify, as well as simulate data on top of anonymizing it. So these are AI-powered synthetic data generators. However, in this scenario, we recently heard about a large investment bank on Wall Street that acquired a financial planning company for $175 million only to realize later, after the acquisition is complete, that the customer accounts that they were looking at were synthetic. And generative AI had made it really credible. So human intervention and expertise is always a must to responsibly use human-like technologies, especially in finance, where we deal with regular people's lives and hard-earned incomes every day. Now, moving on to the payment sector, generative AI can proactively detect and prevent complex fraud in real time, while increasing revenue for business owners and financial institutions at the same time. But again, large amounts of standardized transaction data is critical to help fight fraud effectively. In fact, generative models can also react faster to live data. They can continuously keep updating your dashboards to find out new fraud attacks, which are these days often performed against new payment methods. So, I mean, they can get down to the geographic region, by a specific customer group, you name it, right? Thus, this kind of enormously reduces manual effort, especially a lot of the fraud compliance managers, right? But the key here is high quality data to make accurate predictions. So if the data is incomplete, inaccurate, or outdated, then the results can be unreliable. So lastly, I want to touch upon the FICO score or the credit score, right? So the FICO score, these cannot be generated for people without financial or credit records, right? So these days, some people could be unbanked, underbanked, meaning they don't have digital access or they don't have credit history, but they have a small business in their local community. So how can we ensure that we don't exclude those deserving customers who can get microfinance for their small business, but are not eliminated from the financial ecosystem, right? So in this sense, generative AI can really help expand financial inclusion from a socioeconomic perspective with analytics and insights from large sets of customer data. And further, it can model those to predict creditworthiness of a similar future customer. So it's really important for such micro entrepreneurs to build and grow their local businesses, and of course, communities that are locally thriving, right? So generative AI can parse through disparate raw data sets, and it can also enable fintechs to refine loan applications. So maybe you add alternative evaluation criteria so that you get to faster credit decisioning, but through different parameters, right? So this also reduces the company's risk exposure, right? So you are considering all aspects, and thus this increases inclusive economies worldwide, right? Now, on the flip side, there's a possibility of unconscious bias from historic data sets. So that could still eliminate people based on certain demographic factors, right? It could be race, gender, ethnicity, age, accessibility, so on and so forth. But as I had mentioned earlier, human integrated generative AI decisions are critical, and we need to build tighter ethical AI governance. Thanks again, everyone, for this opportunity. So if you have any questions or you want to chat more about this topic or you want to learn more about women in AI, please connect with me on LinkedIn. My handle is right behind. Goodbye.